This video is going to be very important in the sense of this is going to show us what we need to do in terms of identifying and classifying the setup. So these are just going to be the tools that we're going to be using that keeps us in the plays that we want to be in and keeps us away from charts that just don't have any appeal for this strategy. So within the video, we're going to go over the overall checklist of the technical tools. We're going to look at the 3 setup classifications. As we know now, that is the extinct, the dormant, and the active volcano. Going to go over the tools that we are needed to identify each of these setups. Going to need to know what to look for and then why it makes sense and ensures you are taking a logical risk within each one of these charts. Then we're just going to look at some examples of the classifications. That'll be very basic, and that the purpose of that is just to gain a kind of broad overall perspective of what each of these setups looks like. So this slide is probably the most important because this is the foundational blocks to the Volcano trading strategy. I mean, if you want to really be in the best possible situation for breakout trades and such, these are the tools that I found work the best to ensure that you're where you should be. The first is going to be just obviously price. That's the best indicator to use, and we're going to measure price by using the candlestick chart. We're going to measure volume with obviously volume, and we're going to use 3 moving averages. And there's one thing I want to point out: the 10 EMA. So we are using the exponential moving average. Then we'll go with the 20 SMA and the 50 SMA. We're going to use the MACD, but just the signal line. We're not going to use anything else. And that signal line is going to be just the standard default setting that comes on chart websites or software or whatever. Resistance identification, that's a skill that you'll need to be able to apply. And then just your general chart knowledge. Hopefully you've taken robotic trading. If you haven't, hopefully you just understand charting and technical analysis in general, because general chart knowledge is going to be what allows you to adapt, kind of bob and weave as the market throws punches at you, and that way you can just kind of stay on your toes with that general chart knowledge. So the first classification is the extinct volcano setup, and with these we have no interest. These are not breakout trades. Remember back to the psychology, these are not in the psychological stage that we want them to be in. It's still too risky. Now if we are looking for some sort of bounce strategy, then yeah, this could be a possibility, but this is not a bounce strategy. This is all about breakouts, and with extinct volcano setups, it's just not in our favor. So how are we gonna ensure that? And let me take a step back. These are the ones where the price is still in that panic and maybe surrender stage. Now if you can get a surrender, like I was saying, then that could be very beneficial for a bounce. However, this is not a bounce strategy. So we're trying to avoid the panic and surrender psychological stages. We want to get into more preferable ones for a breakout. So what does this look like? Well, the first thing is the MACD signal line is going to be less than 0. So down here you can see the MACD, and the value is negative 0.05. Not sure if you can see it, but point being, this is a negative value. So that's clue number 1, that okay, this is not a setup that we're gonna be interested in for right now. The other sign is where's the 20 SMA relative to the 50. You can see 20 is below the 50, so right there, no thank you. You can see the candlesticks are putting in lower low, so the price just keeps on going downwards. And although there is a positive divergence here, and positive divergences are a good thing, it doesn't matter because you still have the trend is against us. It's still in this panic surrender stage. Now again, going back to the bounce strategy, very well could work, but we don't care about bounces. So if you want bounces, trampoline trading, that's the course you want. So but this is an extinct volcano. Again, MACD below 0. You can see the 20 well below the 50. Price action just lower lows, lower highs. There's just nothing that is going to give us any sort of assurance or anything that this thing's about to start to explode upwards and start to erupt as a volcano. So this is just a straight up extinct volcano setup. The next type of setup is going to be our dormant volcano classification, and this is one that we're going to have interest in as we go through the course. This is one where the volcano starts to do some rumbling. Maybe there's some minor little earthquakes. It's getting the chart geologists, it's piquing our interest a little bit. I mean, still need some more confirmation, but hey, you know what? This volcano is not dormant. It's rumbling a little bit, so maybe something is about to happen. And in this is more of, we're kind of on the edge of a hope and then excitement. So we're back in the psychological stages of where we want to be for the strategy of a breakout. Again, hopefully at the tail end of the hope stage is what we want, and then just entering into the excitement stage. So we don't want to be at the beginning of hope, because that's when hope is very risky and it could just be like a dead cat bounce or something like that. So we want to be more towards the end of the spectrum where hope is starting to end and the excitement stage is starting to begin. So that's where we want to be with a dormant volcano setup. So what's going to get us to this point? You know, what can we use to try to time up this sort of psychological mindset? First part is the MACD lines needs to be above 0. So you can see that here. And you may be thinking, well, geez, I want to get in down here. Again, that's not the strategy. This is not a bounce. That's not what we're trying to do here. But with MACD getting above 0, or MACD signal line, I should say, excuse me, getting above 0, that's helping push us more in the psychological stages that we want to be in. The 20 is now up above the 50. The candlesticks are starting to put in the higher lows, which is good. And with this, the MACD signal line is the leading indicator used. I mean, we first want to just find out where the MACD is above 0. It's the easiest for the scans. It's just a preferable way to go about things, because as we see as we go through more details, this will be a good job of a leading indicator even before the 20 crosses over the 50. And then the other thing to note is the 50 period, which as I'll call later on in the course, the excitement ruler. You can see what it's been doing. It has been downtrending. So the trend previous to this stuff starting to bottom out has been dormant. So this, or excuse me, not dormant, has been extinct. So it's been extinct, and then at this portion it starts to show that it's moving from extinct to dormant rumblings. Maybe something's about to happen. So this will all get drilled through. So if it's feeling kind of overwhelming right now, don't worry about it. But I promise after you go through everything and then come back and watch this again, it'll make total sense. So again, you can see it's been extinct, but now we're transitioning into a dormant setup, and that's what you want. So the 50 SMA up here, as I'll call the excitement ruler, that's what's going to kind of measure how excited people are. Obviously, not much excitement here. Excitement is going down. However, then right here, excitement starts to level off. And leveling off excitement, although isn't growing excitement, at least it's not decreasing excitement. And then the next one is going to be the active volcano setup. So as the word implies, this is the one where the lava is flowing and everything is going in the bull's direction. It's totally in the excitement phase. The whole hope thing has more than been verified. And going back to the 50 SMA, using our eyeball test, you can see that the excitement ruler is telling us it's all good. I mean, people are excited. And that's what we want. But what we're looking for this is some sort of pullback within the active volcano where it might draw the shorts in. And, they might have a logical reason, but just because they have a logical reason doesn't mean it's going to be the right reason. So we're looking for where shorts may get it wrong. And, just other people get it wrong. But shorts are going to be the ones who, if it moves back up, are going to have to buy back to cover their positions. So that's what we're looking for. In this example here, you can see it's been going and then it's pulled back here. So it's pulled back. It's not like anything's falling apart. You got a very strong trend, MACD signal line well up above 0, all that good stuff. But now it's just a question of, are the people that, are shorting here and down, if they get it wrong, then they're gonna have to cover and get out. They may have it right, and this may be where it starts to roll over, but this could just be a little temporary pullback. Example right here, you can see pulled back some, and then boom, went to new highs. Here was another pullback, boom, went to new highs. So that's what we're trying to do here and trying to see what happens, is looking for a pullback within an overall context where the volcano is very active, the excitement level is very high, and see if we can get another push to the upside. So now we're going to take a look at some examples, just look at some more charts of each. They won't be in PowerPoint slide, they'll be up on my actual charting platform. And again, we won't go into the details, but I just want you to start to kind of recognize, get a drift of what sort of overall broad kind of chart setups we're looking for and not looking for. So the first one here, I kind of want to treat this as a quiz. Let's say you pull up this chart and you're looking at it. What would you call it? What sort of classification would you call it? I'll pause real quick. You can pause the video, and then when you're ready to keep on going, just click play. All right. So if you said this is an extinct setup, then you are correct. So let's go over that. First being, let's just look down here at the, hopefully, which was a good dead giveaway. MACD is signal line is at -18 right now. You have the excitement ruler, the 50-day is going down. Price action, yeah, a little bit, because you had some big moves here, so maybe that would have thrown you off. But still, at the end of the day, whoops, lower highs, and you can see lower lows. But the 20 is below the 50. So even with the choppy price action, that's why I like to incorporate moving averages into the strategy, because it can kind of drown out all this noise here and just still kind of show us what the overall flow is. So again, if you said extinct, then well done. Okay, so here's another one, and same thing. I will pause. You can then pause the video and then determine what sort of setup and classification this is. All right, so if you said this is a extinct one, very well done. Hopefully this was pretty obvious. I mean, MAC or signal line well below zero. Excitement ruler, I mean, the excitement is decreasing extremely quickly. 20 less than the 50, and you know, there's just price action. You can see lower low, and really not even much choppy action. This is pretty darn straightforward, hopefully. So again, if you said extinct, well done. All right, here we are looking at another one, same as the previous two. I'm going to pause, and then you determine what sort of setup or classification this one would be. All right, if you said this is dormant, then well done, you are correct. So let's look at some of the things. Hopefully you just started like with the MACD signal line. Again, that is certainly the easiest way to get a running head start. You can see it is above zero. Looking at the excitement measure, it is starting to go down, yes. But the key thing here is that the 20 has crossed above it. Price action is showing us now higher lows, higher highs, but the big thing again, and that's why I'm trying to drive home, the MACD signal line is above zero. That's our leading indicator. That's what we really care about. And then we use this. Now, don't get me wrong, if you thought, you know what, this looks like extinct to me, and you wanted to move on, then fine. I mean, you're not going to lose money by moving on. If you don't feel comfortable with it, then just move on. So, you know, at the end of the day, this identifying the setups is not life and death, but the only thing where, you know, you're totally going is if you start saying, you know what, screw it, I'm going to start trying to play breakouts when the MACD is well below zero. That's just a whole other strategy, and you're really breaking the rules there. But if you're unsure, just move on to something that you're more clear about. That's why the stock market is great. You just find what you're comfortable with, and then you go with that. So again, if you're thinking, if this threw you off, being that the excitement ruler was pretty much going down, then I can understand that. However, remember, MACD signal line, that's going to be our key thing. And just another little clue was the 20 now being up above the 50. So here is the next one. I'm going to pause, and you let me know what you think it's going to be. All right, so if you said this is an active volcano, then well done. Now, I like this one because I thought maybe it could trip you up because, you know, there's this just catastrophe right here of price action. However, let's go back and go through the steps. You can see here our MACD tool. It is above zero. Looking at the excitement gauge, again, you know, lots of kind of sloppiness, big sloppiness right here. However, look at our excitement gauge of 50. It's chugging on upwards. I mean, its overall trend is certainly up. At this point in time, yes, the 20 is below their 50. However, this is more of a secondary confirmation because when you have, let's go through it again, positive, it's above zero. Let's see, this is increasing. Let's look at the lows. Let's look at the highs, keeps putting in higher highs, and then just general chart knowledge. I mean, you can tell this is an overall uptrend. Yes, this was kind of an abomination here. However, it recovered quickly and then is now you know, going upwards. And we'll also, now if you're thinking right now, well, then how am I supposed to know when to buy? We'll get in all that. I just want to you know, show the overall perspective on things. So yes, I know the 20 is below the 50. However, with all these other things going on, especially the overall flow of things, it would still be considered an active volcano. And then to reiterate, at the end of the day, if this just is confusing to you and you don't feel comfortable with the setup, then just move on. It's not like you have to play the chart if it pops up on your scanner. So, you know, if in doubt, just move on and find something else. Here is the next one. I'll give you a moment and then you let me know. All right, if you said this is an active volcano, well done. I threw this one here because I want to just point out the thing of maybe you're thinking, well, I don't like how we have a negative divergence with the MACD signal line. Does not matter. We don't care about any of that. We just want to know what the overall flow of things is. Sure, this isn't exactly preferable, but at the end of the day, remember, price action and volume are king. You can see here the MACD signal line is still above zero. You look here at the excitement ruler, you know, that thing is showing very nice move upwards. In this case, the 20 is above the 50. and it's one of those where and I'm gonna show this one play out just because maybe you're not convinced that, hey, it's a negative divergence. But if you watch and see what happens, look at that, there it goes up. So point being, there were probably some shorts, and again, the shorts had a logical reason. It's starting to flatten out here, pull back. So maybe they think, what, negative divergence, I'm going to start to short. But just because there's a negative divergence, if anything, that's going to suck in some shorts. And but they were wrong, and you can see they probably started to have to cover there. And there's a nice little opportunity here for a breakout move. So this was active, and don't let negative divergences fool you. We just want them to be above zero. Here's the next one. Go ahead and take a look at it. All right, if you said this was an extinct setup, then well done. We have below zero. Excitement ruler 50 period is well sloping downwards, 20 below the 50, lower highs, lower lows. Hopefully that's a pretty straightforward one to see. All right, for the next one, take a look at it. All right, if you said this was dormant, then well done. Now, I could see if you would say it was extinct. However, MACD above zero. And then this is what I'm talking about, and I'll talk more about this. The 20 and 50 are on what I like to call a crash course. You can see, let me zoom in some more actually. You can see right here that they are going to cross. I mean, they haven't crossed technically. So technically speaking, yes, the 20 is still below the 50. And yes, this has been going down. However, this is where there's some rumblings starting to take place. The rumblings are being seen by the positive divergence here that has finally been able to cross above zero. And you can see that crash course here, 20 will be going above 50. And, this is potentially explosive setup here for the, dormant volcano trade. So this is one where it's still in the hope stage, but it's not as much in the hope stage as it was down here. Here it was very much still at risk of being a dead cat bounce. However, now we are more further into the hope stage and could potentially be right on the edge of entering into an excitement stage. So that's why, again, signal line so important. All right, take a moment and check it out. If you said this one is extinct, then well done. Again, big clue here was the MACD is well below zero. Not only that, it's pretty much crashing at this point. But I could see some, maybe a little bit of confusion just because you have kind of this wishy-washy action with the price. However, wishy-washy action, like I've said previously, that's why we're using our moving averages. You can still tell that the overall kind of trend flavor of the excitement ruler right here is still down. I mean, excitement is still increasing with all these dead cat bounces, and that's why it's important to follow the MACD signal line with everything else, because we need to make sure that this was hope, but it was failed hope. Hope, failed hope, and we want to do our best to make sure that we're positioning ourselves into a location where we're not going to get failed hope. Now, being realistic, sure, there's going to be times where we experience failed hope, but we can position ourselves in the best logical risk area to avoid things like that. All right, here's our next one. Let's take a look at it and let me know. All right, if you said this was a dormant setup, then well done. MACD, you can see down there, signal line is above zero at 0.29. You can see that, yes, it was previously one that was just, extinct. However, now you can see it's starting to round out, but the 20 is also already above it. But again, going back, MACD above zero, this going up. Sure, it's made a move here, but remember, this is if this is going to be become an active volcano, then this would still be close to just the beginning of any sort of move. So sure, it would have been nice to tap it down there and get some shares. However, at that point, it's still too risky. This could easily been the big start of that, or this could have been the dead cat bounce, and this could have been it starting to head down to lower lows. And it just wouldn't have been a good risk versus reward. Yes, hindsight, it looks like that. I want a strategy that gives us right there. Well, that's an extremely risky area to be buying right there. So, but at the end of the day, this is a dormant volcano setup here. All right, take a look. If you said this was an active volcano, well done. So let's take a look at some of the clues. First is going to be our MACD well above zero. Second, you can see the excitement gauge has started to flow upwards. You can see it was down for a little bit and then had flattened out, but is now going up. So this is now going into active. 20 is well above the 50 here, so that's still that's perfectly a good little sign there. Sorry, I couldn't figure out the word that I was trying to say, but good sign there. And it's one of these where you can see the lows very evidently higher than the previous, the highs. So just general chart knowledge, you can see that this has officially started to trend upwards. So this would be an active volcano. Me personally, I wanted to put this one here because I would probably avoid this one just because it doesn't seem like it's that strong of one. Yeah, it came down and flattened out, but I don't know. I just don't like the look of the chart, and I wish I could quantify why I don't like the look of the chart. It just doesn't really, nothing really catches it. But maybe you're looking at this and saying, "Oh man, this is one good, active volcano setup. I know exactly how I would want to play it." And if that's how you feel, then go for it. I mean, that's trading. We're all different. We're all going to view a chart a little bit differently and have different feelings towards it. So I wanted to put at least one in here where I personally probably wouldn't have liked it. But I mean, like I said, if as soon as I pull this up, you're like, "Oh yeah, moneymaker," then go for it. So it's all up to you, all personal preference. All right. So if you said this one is active, well done. MACD above zero, excitement gauge, very strong upwards move. You can see the 20 is well above it. So this one, on all accounts, I'd say is hopefully a pretty clear active volcano. All right, take a look. If you said this one is extinct, well done. MACD above or below zero. Excitement gauge clearly showing it's decreasing, 20 below it. Lower highs, lower lows. This one is just flat out extinct. We have no interest. All right, take a look. If you said this one is dormant, well done. Sort of a tricky one with the highly decreasing excitement ruler here. However, our MACD signal line is above zero. You can see actually if you look really close, but if not, if you can't see it, just trust me, the 20 period has crossed above the 50. And then just from the general chart knowledge and pricing, you can see it's now begun to put in higher lows. And you can see, I'll just fast forward because maybe you're not convinced, thinking, "Hey, wait a second, this is way too much of extinct." But you can see right there, a nice move did happen there. So, but that's what we want. We're trying to catch them right as they're trying to transition from out of hope, because this is still hope. This is shorts are thinking, okay, this was a dead cat bounce. However, as you can see, they ended up being wrong, and others, that may, they were just wrong. But regardless, our signals were all there, so that's why we would have played this one as a dormant. All right, take a look. If you said this one is extinct, well done. MACD signal line below zero. Excitement ruler clearly has now downwards move to it. You can see here, earlier I talked about a crash course. There is no crash course here. I can zoom in some more. You can see the 20 is not about to cross above the 50. They're both going down. Could that change? Yes, but right now there is no, we can't sit here and say, the 20 is for surely going to be crossing up above the 50. That's just not going to exist right there. And then maybe you're thinking, and I want to point out that, hey, look, it went above zero here, but then it crashed. Well, while that is the case, as we get further into the lessons, you'll see that. And same thing here. Hey, it crossed above zero, and then look, it fell on us. There's safeguards in place that will help prevent getting caught in moves like this. Now, is it going to prevent us 100% of the time? I wish that would be the case, because if that was, then I would be, richer than Warren Buffett. But there will be some precautions put in place so we can try to avoid little blips like this. But we'll get into that later on in the lesson. But if you said extinct, well done. All right, take a look. If you said this is an active volcano, well done. Signal line well above zero. Excitement ruler right here, 50, has a strong upward slope to it. Kind of chilled out here. However, during this period, you can see when you correspond that with the price action, still did a good job of putting in a higher low and higher highs. So that still, checks out perfectly fine. So again, this one would be an active volcano. Take a look. If you said this is a dormant volcano, well done, good job, and I'd even almost call you're probably a little advanced for where you should be, because the difference here is pretty darn small. Well, not darn small, because right here it's above zero, and as I've been trying to harp and drive home, signal line above zero, it's the chart is in play. However, I could see where you said, well, got a nasty downtrend to it. It is putting in lower highs. This wasn't exactly a high or low. This was still pretty, pretty mild. However, right here, look at and let me zoom in so you can see better. But here's another case of a crash course. You can see that the 20 is sloping up very strongly and giving the strength of this upslope here, and that the MACD, or excuse me, that the 50 period is just going sideways. I mean, it's going to cross over there. So that's kind of jumping the gun a little bit and trying to anticipate things. And once again, we will get to that in detail and go over plenty of examples of that. However, above zero, crash course right here, and it's one where it could be a very nice setup for us as the chart moves from hope into excitement. So hopefully you did pretty well in terms of the little quiz there. And we're gonna, like I said, go into much more detail than just this, but I just want to start to train your eyes on what to look for. And if you took one thing out of this video, and maybe I drove you up the wall by saying it, and if that's the case, then good, I did my job. But MACD signal line above zero, that's the key thing. That's our leading indicator that the chart very well could be in a play. But again, at the end of the day, if you're unsure about a classification setup or whatever, then just move on and find one that you are confident in. There's no such thing. There's over 4,000 ticker symbols out there. So there's going to be something that fits your criteria and fits your comfort level. So at the end of the day, get it into your comfort level and things will work out as long as you're still within the general framework of these rules. I mean, if you're playing cowboy and going way against or not cowboy, if you're playing rebel and going way against the rules and stuff like that, then yeah, you might get burned. But within the general framework, don't panic if you can't exactly classify something. Just move on and find something you're more comfortable with.